updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 17 minutes after the latest Fed minutes, stocks are now selling off. Fed officials see their inflation goal hit, but they are divided on the taper. S&P 500 now down by 20 points. Lows of the day down 0.5%. The Dow is now down 178, down by 0.5%. The Nasdaq 100 index trading lower now by 0.4%. The Nasdaq Composite Index down by 0.3%. 10-year down 6/30 seconds. 10-year yield 1.28%. Gold down 0.1%. 17.84 the ounce, lower now by $1.58. West Texas Intermediate crude down 1.7%. 65.44 a barrel. After earnings, Lowe's is surging 10.1%. Rival Home Depot up today by 0.7%. Target reported this morning down 1.8%, and Robinhood will be reporting today after the close of trading, up now by 7.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the big news when it comes to the spread of the Delta variant and the latest with COVID is, of course, the United States today announcing that it's expanding boosters to all American adults, this to head off the Delta variant. We have with us now Dr. William Haseltine, Chairman and President of Access Health International, also the author of CV, PTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. He joins us now on the phone from Connecticut. Dr. Haseltine was with us back in May, and he actually brought up the topic of booster shots. Take a listen to what he had to tell us just a few months ago.
Today, this morning, we got the first shoe that dropped. And that is that one of the best of all the vaccines, the Moderna vaccine, doesn't protect against two of the common variants after about 6 months very well. Wow. At least as judged by the ability of the antibodies in people who were vaccinated to neutralize the virus. That's different from a real vaccine test in showing that it's failing to protect people in real life. But it's a pretty good indication that it's not going to protect people for very much longer. So the net result is also quite positive. In the very same report, it said if you get a booster at 6 months, you're golden again. You're maybe better off than you were before. So what I've done is I put in my calendar 6 months from when I got my last shot, I'm going to get another.
You put in your calendar, Dr. Haseltine, 6 months from when you got your last shot, you're going to have another. Do you stand by what you said a few months ago about the durability of the Moderna vaccine?
Well, you know, it's not just Moderna vaccines, it's all vaccines. The two best vaccines, of course, are Pfizer and Moderna. And we just today have some pretty sad news from Israel that not only are the rates of infection rising very, very sharply, but about 60% of the people who ended up in the hospital are fully vaccinated. So not only is it not protecting from infection and transmission, it's not protecting from serious disease in many cases.
That's really concerning data from Israel, because the data that we're seeing here in the United States is 85 to 90% of those who are in the hospital haven't been vaccinated. Why do you think you see the discrepancy? And also, we should say that not all studies are created equal. We have to take all of this data with a grain of salt.
No, we don't.
Why not?
This is really good hard data. And it's looking like, and there's a new study out that says your degree of protection is a function of how long time has lapsed since your last vaccination. So there's about a tenfold difference in hospitalization based on the time that has elapsed since your last vaccination. I think it's very clear now, and that's why the government has moved the way it is. It's very clear now that to protect against serious illness, where most people are going to need a booster. They've pegged that at about 8 months. It's probably about right for most people. For people who are older, it's probably a little shorter than that. 6 months will do. And so I would stand by my statement that 6 months from my last vaccine, I'm certainly planning to get another booster. And I think the government's official recommendation now is every adult get a booster beginning 8 months from the last vaccination.
Dr. Hazeltine,
This isn't magic. This is kind of like the flu. I mean,
right.
This isn't new to us. We think every year we have to get a new flu vaccine. I don't know what's so special about this, why people are so surprised.
Yeah, and every few years we do have to get boosters for other vaccines as well. I mean,
Sure.
We certainly have to do that. I think perhaps the question that people would have about this is it specifically related to the Delta variant? Or is it the durability of the vaccine declines regardless of whether or not we're being hit with new variants?
That's a good question. The answer is yes to both. Delta is better at evading the vaccines, but as time goes on, the vaccines will wane in effectiveness against all variants, even the original ones. So that's to be expected. If you go back and look at what I was writing a year ago, I was predicting that any vaccine that would be developed would be of relatively short duration. That's because we have a lot of experience with viruses like this, particularly the flu. I think the more people start thinking about this as a very dangerous virus like the flu, much more like the flu than anything else, the better off we'll be. Something that has to be observed, will come back every year, maybe twice a year. The odd thing about this one is it's coming back in the United States in the summer and the winter. And so it's a little different in that respect. It's more lethal, so we've got to be more careful, but we've probably got to keep up with our vaccines every 6 months to every year. That's not terrible, but it's not the best news, but it's not the worst either.
Is it fair for the United States? Is it fair for the United States, Dr. Hazeltine?
A lot more protection you had before.
Is it fair for the United States to encourage booster shots when the vast majority of the world has not yet even had access to these vaccines?
It's our country's responsibility to take care of people in our country first. That is what the government's job is, to take care of us. Having said that, we should do everything that is possible to make sure that others in the world also have the advantages that we have. It's unfortunate that many areas of the world have neglected their own vaccine programs, and they're now paying the piper. Yes, we should help, but not at the expense of our own citizens.
Dr. William Hazeltine, Chairman and President of Access Health International. He's joining us from Connecticut. He's also the author of CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. Dr. Hazeltine, stick with us. We're going to take a break. We're going to do some news, and then we are going to come back. We're going to talk more about boosters, more about the latest with the Delta variant, and, of course, touch on your latest book, CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. This is Bloomberg Radio, and this is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. I'm Tim Stennebeck, live in the Bloomberg Interactive Brokers Studios in New York. In just a couple of minutes, we're going to get back to Dr. William Haseltine. He's chairman and president of Access Health International, also the author of CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. We're going to talk about boosters and, of course, his latest book in just a few minutes. In the meantime, let's get a check on that trading day with Charlie Pellet.
All right, thank you very much, Tim Stennebeck. Looking at a split market right now. NASDAQ higher by 19, now up by 0.1%. NASDAQ 100 index flat right to the numbers. We'll give you the why in a moment here with the S&P down 6, drop now of 0.2%. The Dow down 75, a drop there of 0.2%. 10-year down 230 seconds, 10-year yield 1.26%. Stocks and bonds dropped after the Federal Reserve signaled a formal decision on a reduction of its massive bond buying program could happen this year. Again, the S&P down 6 now, a drop of 0.1%, 10-year yield 1.26%. Gold is up 0.2%, higher by $2.82 the ounce at $17.89, and West Texas Intermediate crude down 1.7%, $65.51 for a barrel of WTI. The Biden administration will start offering booster shots in late September to all vaccinated Americans as the coronavirus Delta variant continues its nationwide spread. Alabama Governor Kay Ivey has issued a limited state of emergency to help hospitals after the state's health officer warned a surge in patients has put, quote, extreme stress on medical facilities in the state. Hospitals are running out of intensive care beds, putting non-COVID patients at risk. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
And the challenge is, it's not only people don't die of just COVID, people are still having heart attacks, strokes, sepsis, injuries, and there is insufficient resources to treat all those other people who may be vaccinated, who don't have COVID, but do definitely have medical emergencies.
Dr. Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine stocks that we track, Pfizer shares down today by 0.2%. Its German partner BioNTech down 2.6%. AstraZeneca up 1.1%. Moderna shares, they are down 1.9%. And we have got Johnson & Johnson shares, J&J, trading lower now by just about 0.7%. The headline now from the Bloomberg Professional Service, CME Group is denying an earlier report of a bid for Cboe Global Markets. Developing story. Stay with Bloomberg for the very latest. And by the way, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Let's get right back to Dr. William Haseltine, chairman and president of Access Health International, also the author of many books. His latest, CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. Dr. Haseltine, before we get to the book, I want to talk a little bit about vaccine availability. Here in the United States, vaccines are still only approved under emergency use authorization for people over the age of 12. How do we get past this pandemic, especially as kids go back to school when millions of children cannot be vaccinated?
We start vaccinating our children as soon as possible.
How soon can that be?
I think that once the results are in, I'm pretty confident that this vaccine will be safe for children, but until you've done the studies, you don't know. I know our government is working as fast as possible to get those studies done. I hope it's done, let's say, by Thanksgiving. I would certainly hope so.
You think that it's realistic to think that we could get approval, emergency use approval by then, authorization?
Yes.
Okay.
Yes, and I think by that time we'll have actual approval for the Moderna and the Pfizer vaccines. We'll have a real approval, not just emergency use authorization.
Do you think that we'll have approval for or emergency use authorization for ages 0 to 12, or does it start with like 5 to 12?
I don't know when it's 0, but it's maybe 3 or 2 to 12, yes.
Okay.
I think that's what we're heading for. I know that people are working as hard as they can to get that data so they can, if possible, if it proves to be safe, to go ahead and do it. And my guess is it looks like it will be safe.
Well, look, it has been a tough year for many, many people, not just specifically because of COVID, if they got it or even if they didn't get it. Perhaps they've suffered from what you describe as CVPTSD. You write that it encompasses the full effects of all that we've endured over the past year and a half, manifested daily in rising rates of depression, anxiety, and drug addiction, and the ongoing loss of academic opportunities for the young. I wonder how we get past this. If you say that COVID's going to be endemic like the flu, how do we get past COVID PTSD?
Well, the first thing, we have to recognize that it exists both for individuals and actually for the whole society. In addition to the normal stresses that we undergo, this has been a tremendous economic stress. It's been a stress of fear of getting the disease. There's been a lot of conflicting messages, both official conflicting messages and unofficial conflicting messages. It's like the perfect storm for creating stress and anxiety. And if you look at the numbers of people who report anxiety, it's close to 50%. People who report depression, much higher. A lot of young people are feeling especially stressed. Now, what can you do about it? As I say, the first thing is to recognize it. You know, we didn't recognize combat post-traumatic stress disorder until 1980. We called it shell shock or malingering. We had all sorts of names for it. Once we had a name for it and we recognized what it was, we began to develop treatments. And there's a very well-developed treatment program and paradigm for post-traumatic stress disorder. The Veterans Administration uses it all the time. And it involves counseling, recognition of what's happened, and then there's sometimes some drugs that help. But I would say for what's happening now, let's take just schools, for example. All the kids are going back to schools. The teachers are stressed, and they're going to be dealing with a lot of stressed children. I think we have to support our teachers and our children with additional social work and psychiatric social work in our schools, because that's where we're going to see it first. As the children go back to school, they're going to be learning problems, there'll be behavioral problems. They can manifest themselves as people who are totally withdrawn or totally unruly. You get both extremes as a result of this, and we're going to have to recognize it. As more and more people get back to work, I think many big businesses are going to have to help their employees with special counseling. And it's going to be really important to do that, to get over this, both as an individual and as a society.
We've seen that start to happen in some instances, but in most of those cases, it's the companies that the white-collar employees work for already have great benefits. Dr. Hazeltine, Chairman and President of Access Health International, also the author of CVPTSD, COVID-related post-traumatic stress disorder, what it is and what to do about it. It is always great when you join us. Thank you so much for taking the time. Let's get the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The Biden administration will start offering booster shots September 20th to all vaccinated U.S. adults, a massive expansion of a program previously limited to those with weakened immune systems. This is as the coronavirus Delta variant continues its nationwide spread. Surgeon General Vivek Murthy outlined the reasons for the move.
Recent data makes clear that protection against mild and moderate disease has decreased over time. This is likely due to both waning immunity and the strength of the widespread Delta variant.
Murthy says healthcare workers and the elderly who received shots at the beginning of the year will be the first ones eligible for the booster. It's recommended to be given 8 months after the second dose. President Biden will be discussing the program during a news briefing at 4:30 Wall Street time, which will be carried live here on Bloomberg Radio. The sex abuse trial of R&B singer R. Kelly is now underway in Brooklyn. Prosecutors are expected to introduce a multiple group of women, as well as former associates who've not yet spoken about their experiences with the singer. Attorney Gloria Allred is representing at least one of the singer's accusers.
I'm very confident that the court will afford a fair trial, both to Mr. Kelly and also to the persons who allege that they are victims.
Again, attorney Gloria Allred. Prosecutors are expected to outline how Kelly's managers, bodyguards, and other employees helped recruit women and girls and occasionally boys for sexual exploitation. Defense attorneys say the alleged victims were groupies who wanted to be with Kelly. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stenevec live in the Bloomberg Interactive Brokers studio in New York. I'm also joined by Charlie Pellet. Charlie, it happened just like perhaps many people thought it would. Carol was asking the question months ago, are we going to be wearing masks in the office again when it comes to fall? Well, here we are. We're not even at fall. And already, Goldman masks, scrutiny at Morgan Stanley as the Delta variant spreads and upends plans for returning to work.
Well, let me go on record and ask the question that Carol asked sort of, are we going to be wearing masks in winter? And if you answer that, what about spring? I mean, how much longer is this going to go on for? And, you know, I vividly remember being in the studio on the Friday before we all went home, and there was a quote. One of our guests said something to the effect of, and I wish I remembered who this guest was. He said, we all knew when it was time to leave the office. Nobody knows when it's time to go back. And that's what we're seeing right now. The headline on the Bloomberg story written by our Jenny Serrain and Mary Bikert, it is deja vu for Wall Street with September return upended again. The reason, Tim, deja vu is because this time last year we were talking about see you in September.
Yeah, many Wall Street firms, Charlie, are now hurriedly reworking their plans, either pushing back the date when they expect staffers to return or requiring workers to get vaccinated. Others have reinstated policies that require those employees who have been coming in to don masks. So even those who have been vaccinated to start wearing masks again. We've seen that a lot in recent weeks. The latest round of changes, as you mentioned, maybe giving some bankers a feeling of deja vu.
Yeah, exactly. And our story also, too, runs down what's going on at Citigroup, Wells Fargo, J.P. Morgan, Morgan Stanley, Goldman Sachs. No wonder it's one of the most read here. But at Goldman Sachs, employees are required to share their vaccination status, but the New York-based firm is not forcing workers to get their shot.
It follows the biggest banks, but we've also seen news from smaller financial institutions. State Street, for example, earlier this week announcing that it would give up its offices in New York City. Now, the company is not based in New York City. It's based in Boston, but it does raise the question about to what extent people will be returning to work in this new normal, especially as more and more people are required to wear masks as the Delta variant continues to spread. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy trading after the Fed minutes. Stocks fell after the Federal Reserve minutes signaled a formal decision on a reduction of the central bank's massive bond buying program could happen in 2021. Bonds and the dollar fluctuated. Right now, we do have the S&P lower by 13 points, down 0.3%. NASDAQ turning around up 3, higher by about 0.1%. We've got the Dow down 121, lower by 0.3%. NASDAQ 100 index down 0.1%. Russell 2000 up by 0.6. 10 years down 3/30 seconds. 10-year yield right now 1.27%. Gold flat up 3 cents now, 17.86 the ounce. Call it unchanged. We have got the price of oil, West Texas Intermediate crude down 2.1%, down $1.38 a barrel, 65.21. And repeating our earlier headline involving the CME Group, it is denying a report from the FT of a bid for Cboe Global Markets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, 100-hour work weeks, working on the weekends, sleepless weeks, burnout, and of course that PowerPoint slide deck from a group of 13 first-year analysts at Goldman Sachs that detailed the rigors of Wall Street life. It's the cover story of the upcoming issue of Bloomberg Businessweek magazine. You can read the story now on Bloomberg and on Bloomberg.com. And of course, Bloomberg.com/Businessweek. It's written by Sri Natarajan, finance reporter for Bloomberg News. He joins me in the Bloomberg Interactive Broker studio. Sri, is the answer to this burnout, the rigors of first-year junior bankers, $120,000 salaries?
Well, let's go back to the start of the year when this really became an issue. It was the leaked presentation out of Goldman Sachs where 13 first-year analysts put together this report that detailed the rigors of their work life, the 100-hour weeks, endless days just working on boring presentations and slide decks again and again and again, and always trying to respond to the demands of the clients, irrespective of the time of the day. They outlined a bunch of changes, including, protected weekends, lesser hours in a day. Not once did they mention anything about pay. The main complaint at the start of the year wasn't less pay. However, that seems to be the solution that everyone's gravitated towards and crowded around, because that's the easiest thing to change. You're in an industry where the banks are always trying to please the client. The client comes up with an idea and wants something at breakfast, you want to make sure that they get a glittering slide deck by lunch. When it is a race to bottom like that, it is very hard to change the fundamentals of their work structure. So the best option that they have at their disposal is a lot of money lying around, throw it in their direction, and hope that they don't complain anymore.
And as you point out in your piece, Sri, it's basically a rounding error for these companies as far as salaries go. I want to bring in Joel Weber, editor of Bloomberg Businessweek. He joins us now on the remote from Massachusetts. Joel, as I was reading this piece and hearing from veterans in the industry, some big names who were quoted in here, I'm thinking to myself, wait a second, isn't this just part of the life that people signed up for? This is how history majors indeed become billion-dollar deal makers.
Well, and that's been one way that the industry has thrived, right? It's sort of this gauntlet that junior bankers go through, and yeah, you're well compensated, but your life sucks for a couple of years, and then you get on the other side, but you know all the ropes, and this is kind of a rite of passage. And yeah, there are some big names in this story. John Mack, Lloyd Blankfein, that Sri, like Sri does, he just calls up whoever he wants and gets great quotes from them. And I think that one of the sentiments there was just like, boy, times have changed. Like there was a moment in time in investment banking not so long ago where this was viewed as something that you just you stomached and did and got to the other side, and you were thankful that you got paid at all. And so I think it does speak to sort of this generation, but it's bigger than that, because these are really smart kids and they could have their choice of jobs. And I think what Sri points out in the story is that don't forget, like, you can go work in tech and get paid as much as this. You could launch your own business and there's more glory and satisfaction potentially in that. So yeah, there's a lot of things these people could be doing that's not working on Wall Street, and And Wall Street, when Wall Street's got a problem, it does what Wall Street does, which is, throw money at it.
I think that's extremely important what Joel mentioned right there. The big difference. Yes, the perception has been what you're signing up for. This is what your life is going to be. But what is the difference between the Wall Street of 2021 and the Wall Street of 1991? 1991, there was no tech industry. There was no real internet to speak of.
There was no Facebook or Amazon looking for that talent.
Amazon, Google, so no established big-name tech players looking for that talent. No potential for great startups that were relying on the internet to suddenly become these multi-billion-dollar companies. So if you are the most talented of your graduating class, you would waltz into a job into banking because you knew that after a few years of struggle, it was a lifestyle of corporate jet setting and lavish paydays. It's not the only game in town anymore. When you are the best and everyone's falling over each other to get a hold of you, you have a bunch of options, and finance necessarily isn't the number one choice for you. And that is why the banks have to do everything in their ability to make sure the talent still comes towards their way, and not just talent, the top talent.
Okay, so there's top talent, and you got to speak to, obviously, the Max of the blank finds of the world. Can you tell us about the other guy that you talked to?
Yeah, I mean, and again, if you read this story, you get the view from the top. You get the two latest former CEOs of Morgan Stanley and Goldman Sachs, arguably the two most important investment banking franchises out there. But we also spoke to a junior banker who worked at Goldman Sachs until the summer of last year and left. What did he do to cope with the strains? Put on his headset, blasted fake rain noise, went into a bathroom stall on the 32nd floor of 200 West Street, the global headquarters of Goldman Sachs, and took power naps in there. These were stories we read in the Michael Lewis book, Liar's Poker, from years and years and years ago. And yet that is still very much the reality. And he pointed out, look, there's a lot of negative repercussions to it. He wishes there were other changes that people would propose, but because those changes are not easy, you see the pay solution as the one that everyone feels comfortable with, even though they're making all the right noises about work-life balance and being more understanding. Reality doesn't necessarily reflect that.
Well, the proof is in the pudding. It's in the data. It's in the numbers. When do the banks expect to start seeing results from whether or not these higher salaries are actually working? Because as you mentioned, this group of 13 young bankers, they didn't mention higher salaries as one thing that would help alleviate some of this pressure.
I would argue that the higher salaries are a result of the fact that you are in this golden era of investment banking where the banks are absolutely bathed in billions of dollars of extra profit. So you have enough money lying around to be able to raise the base pay for a lot of these people and even make sure that they have great bonus payouts at the end of the year, which at times could be about as much as your base pay. So that's the part of the exercise that they're undertaking to make sure there isn't a lot of complaining. They don't want the other people who are getting into their first, second, and third year in colleges and starting to think about their career to say, wait a minute, I don't want to get into finance because it seems to be filled with these horror stories. And that's why they're trying to figure out whether money could be a solution on that front.
Can you explain, Tree, how you're attracting and retaining talent has to do with the sort of salary war, the wage war, where one firm comes out and says 90,000, the next one says 100, one says 110. How high does it go?
It could go as high as the market demands. At the start of the year, there was a wonderful story in the FT a few months ago where they quoted a Goldman Sachs executive as saying that they don't want to be caught to the demands of the mercenaries. They felt that $85,000 is a great starting price because then it's going to be padded by another $50,000, $60,000, $70,000 in bonuses. And if you're a 21, 22-year-old right out of college and going to be paid that much, what could you possibly be complaining about?
Maybe not sleeping. Who knows? Sri Natarajan is finance reporter at Bloomberg News, joining me in the Bloomberg Interactive Brokers studio. Check out this story. Wall Street brings out the money cannon to lure junior bankers. It's available now at Bloomberg.com and on Bloomberg.com/Businessweek. It is the cover story. For those of you listening in New York, Washington, San Francisco, or watching on YouTube, Bloomberg Business Week continues. If you're watching on Bloomberg 106.1 in Boston, Bay State Business is next.
a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading of Fed Wednesday, this Wednesday, August 18th. We have got the Dow, the S&P, they're trading lower. NASDAQ is advancing. Stocks fell after Federal Reserve minutes signaled that a formal decision on a reduction of the central bank's massive bond buying program could happen in 2021. Bonds and the dollar fluctuated. S&P down 12 now, a drop of 0.3%. The Dow down 125, down 0.4. NASDAQ up 8, a gain of about 0.1%. 10-year yield 1.27%, 10-year down 2.30 seconds. And with more on the Fed minutes, here's Bloomberg's Vinny Del Giudice.
Fed officials discuss plans to wind down emergency aid initiated during the pandemic, but the discussions on tapering come across as preliminary. They also determined more needs to be done to restore a labor market recovering from record unemployment and concluded they hit their inflation target after an extended period of lethargy. Some people may argue they overdid it. Vinny Del Giudice, Bloomberg Radio.
So again, we do have the 10-year at 1.27%. Gold flat on the day now, $17.85 the ounce, little changed. And West Texas Intermediate crude tumbling 2%, briefly dipped below $64 a barrel, $65.28 for a barrel of WTI. Lowe's shares jumping after the home improvement giant raised its full-year forecast, surging now by 10.8%. Rival Home Depot up 0.9%. It reported yesterday. Target reported this morning sales growth slowed in the second quarter. Target shares down 1.9%. Among the companies after the bell today, we'll be hearing from Robinhood. Robinhood up by 7.5%. Southwest Airlines is offering an employee incentive program to help boost applicant referrals as the carrier struggles to hire 4,500 workers in a tight job market. Southwest shares, they're up right now by 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Carol Massar live in the Bloomberg Interactive Broker Studio on this Wednesday, August 18th. Well, we've covered a lot on Bloomberg News, and of course on this show, Bloomberg Business Week Radio, the crackdown on Chinese tech companies, whether it has to do with tech companies, whether it has to do with online education companies, whether it has to do with companies that are listed on U.S. exchanges. And as a result, we have seen in the last few months, company share prices continue to decline. Once high flyers are now trading at a fraction of what they used to trade at. Joining us now is Katie Greifeld. She's a reporter for Bloomberg News. She's also my co-anchor on Bloomberg Quick Takes Stock. It airs each day at noon Eastern Time. Also with us is Isabella Weber, assistant professor of economics at the University of Massachusetts Amherst. She's also the author of How China Escaped Shock Therapy, the Market Reform Debate. Katie, you have a new article out on Bloomberg saying that China dip buyers finally reached the breaking point after a 56% loss. Take us into it.
Took them long enough.
It did. Well, they kept trying. I mean, if you look at this ETF, it's the ticker is KWEB. It's the Crane Shares CSI, China Internet Fund. So $2.2 billion have come into this ETF just in the past 2 months alone, which is 98% more than all other ETFs. But we're finally starting to see outflows because they have just been crushed. It has not worked. This fund has fallen 41% year to date. And it's really feels like one of the only markets where dip buying hasn't worked. That's been sort of a defining feature of American equities for much of this year, really, but not so much in Chinese tech.
Well, and so it is interesting to see finally like the markets catching up. How much of it, from what the conversations you're having, has to do with all the policies that President Xi is imposing at this point?
It has to do squarely with that, I would say. I think the hope, if you rewind back to really the beginning of July, was maybe we've seen the worst of it. Maybe we've seen the worst of this crackdown. But really now it feels like anything could be targeted. It's so wide-ranging. It's unclear what's going to come next. And the losses have already been so great at this point that it's hard to stick around and keep trying.
Let's bring in Isabella Weber, assistant professor of economics at the University of Massachusetts Amherst, also the author of How China Escaped Shock Therapy, the Market Reform Debate. Professor Weber, it's great to have you back on the show. How much further could Xi Jinping go? Is this just the beginning?
Yeah, thanks so much for having me. I mean, I'm someone who has worked on this historically, so I think it's worth taking a step back and asking ourselves what kind of underpinning logic we see here. And I think we see a logic where the government has its own goals that are beyond market valuation, that are goals that are quite pronounced at this stage. I think two of the clearly articulated goals that we have been seeing being invoked in this context again and again is the idea of common prosperity guidelines, which is a move away from the idea of let some get rich first to let's change this and move towards common prosperity. So if you take the example of the education sector, initially private tutoring was a relatively minor thing. Then it became so important that certain parts of the population couldn't keep up with education because of how important private expensive tutoring became. And now we have this massive crackdown. I think the second dimension that has been invoked again and again is the idea of disorderly capital expansion and the idea that antitrust and anti-monopoly measures are necessary basically in an attempt of the state to rebalance its relationship with massive private companies that have great amounts of power at that point in key sectors.
Isabella, how much of this is about making sure that President Xi stays in power, the party stays in power and keeps everybody happy, that there aren't uprisings, that there aren't riots? How much of it is about that, or how much of it is it about really creating a new China, a real developed economy in the like of maybe the German model in terms of how it approaches quote-unquote capitalism?
Yeah, I mean, this whole idea of the German model has been floating around in a quite viral fashion on the Chinese internet. You might hear my German accent, so let me take this opportunity to comment on this. I think that the whole idea of antitrust, standard setting, having an economy that is oriented towards key sectors such as technologically intensive sectors and so on is certainly to some extent in parallel with the German model. But at the same time, I think it is absurd to think of China in its entirety as representing the German model. I think China has been rearranging its state-market relationships in such complex ways over the last decades that we really have to understand it in its own terms. And this involves, of course, an important role of the state in the economy in an attempt to stabilize that. But at the same time, we also see a reshifting of the economic model. So the whole idea of common prosperity guidelines is, of course, related to the reshifting to a more domestic demand-driven economy. The idea of disorderly capital expansion is related to the idea of less reliance on possibly volatile capital flows.
Katie Greifeld, help us contextualize this, and particularly how the rout on Chinese tech companies compares to what we've seen in the NASDAQ, for example, or U.S. tech stocks.
Yeah, you've really seen this huge gap open up because if you look at the Qs, the QQQ ETF, which tracks the NASDAQ 100 and the tech stocks in it, it's up almost 17% year to date. Whereas, again, KWEB, if you look at it, it's down 41%. What's interesting is that this is a real reversal from what we were seeing at the beginning of the year. Up until really mid-February, you were seeing Chinese tech, that sector there, really pull ahead, really leave American tech firms in the dust. But obviously now you have a 56 percentage point gap open up between those two indexes. So it's really been amazing to watch this just reversal of fortunes.
Isabella, just got about 40 seconds here, 45 seconds. I think about our audience. It's an investment audience. How do they need to be thinking about China? Some investors obviously pulling back. We're hearing Katie talk about it. Others say that they are still committed to the Chinese market. So in about 30, 35 seconds, how do we need to think about it as investors?
Well, I'm an academic, not an investor.
No. But will more changes continue? Will China be embracing more capitalism?
That there is a 5-year plan that just is being discussed around the strengthening of state control over certain sectors. We have been seeing talk about the healthcare sector and so on. So I think this whole reshifting is certainly not over. What that will mean in precise terms, which sectors will be evolving in which way, really remains to be seen. But I think this major move that we have been observing will be with us.
We love academics.
We do.
You guys have a historical perspective that really, I think, helps us. And we love Katie Greifeld on anything. She can do no wrong. All right, Isabella Weber, Assistant Professor of Economics at the University of Massachusetts Amherst, author of How China Escaped Shock Therapy, The Market Reform Debate, and, of course, your co-host on Quick Take, Katie Greifeld, and so much more.
Noon Eastern Time. Let's get a check of the latest world and national news with, hey, Nancy.
Thanks, Tim. The Biden administration is confirming today it is preparing to offer COVID-19 vaccine booster shots to anyone who received the Moderna or Pfizer vaccines. U.S. Surgeon General Dr. Vivek Murthy laying out what's next.
We are not recommending that you go out and get a booster today. Instead, starting the week of September 20th, fully vaccinated adults could begin getting their booster shots 8 months after their second shot of an mRNA vaccine.
So Murthy says that means the first people to receive the vaccine, healthcare workers and seniors, will be the first ones to receive the booster. President Biden will be speaking about the program at 4:30 Wall Street time, and you can listen here on Bloomberg Radio. Well, the honeymoon may be over for President Biden.
President Biden's approval rating has dropped below 50% for the first time since he took office. The average from 538 puts his approval at 49.8%. Real Clear Politics has it at 49.6%. The president's ratings peaked at 55% for both trackers early in the spring. Axios reports this dip is probably tied to the Delta variant. The latest polls were taken before the president's response to the Afghanistan crisis. In Washington, I'm Nathan Hager, Bloomberg Radio.
Speaking of Afghanistan, the Pentagon is giving an update on the crisis. We'll give you an update when that comes in. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nan, thank you so much. Carol Masser, Tim Stenovic in our Interactive Brokers studio. And are you looking for a house?
I feel like I'm always looking for a house, right?
I know. Aren't we always?
We're always just on Street Easy. That's what it is. There was a great article a few months ago about this. We're all just spending so much time on Street Easy.
It's so true. I love looking at real estate. Well, anyway, we've got a story on the Bloomberg and at Bloomberg.com by our Prashant Gopal about soaring prices, competition, desperation. The dramatic conditions for U.S. home buyers during the past year are now spilling into the market for rentals.
Right. So, we've been talking about the same. We've been talking about the same exact thing for months now about homeowners. But the problem is that prices have become so high that people who are would-be home buyers are being deterred by those higher prices. They're going back to renting, and therefore rental demand is up, and therefore prices are up.
Basic supply and demand. Landlords from Tampa, Florida to Memphis, Tennessee and Riverside, California are jacking up rents at record speeds. For each listing, multiple people apply. Some renters are forced to check into hotels while they hunt after losing out too many times. This is just crazy. This is the basic supply and demand, isn't it?
I got to tell you, I have a friend who just got a new job. She's moving from the South to Seattle, and she said, wow, real estate prices in Seattle are a lot more expensive than they are in the South. And she's got to move for her job. So there is some sort of timeline here.
Yeah.
And what is she going to do? And what is her family going to do in the time that it takes to actually find a rental? Maybe they'll have to stay in short-term housing somewhere.
That is nuts. I mean, I see it in my neighborhood. Houses, something goes up for sale, and it's like sold very quickly.
Yeah.
It's often going for above the offer price. How many times have we covered about multiple offers on pick your metro area?
You do have
suburban area.
You do have to wonder how much longer it goes on. Interest rates are going to be low for a while, but what is the tolerance that home buyers and prospective home buyers have? When do they throw in the towel after seeing 15 or 20 listings and losing out to other bidders?
Right, and we've done the stories about those first-time home buyers, that they're being pushed out because the prices are so high at this point. We're going to talk actually about housing at the end of our broadcast at about 4:45 Wall Street time, about a unique service that's helping turn renters into home buyers. You're listening to Bloomberg Business Week. It's Wednesday, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell here with the Dow, the S&P, NASDAQ, all declining on this Fed Wednesday. It's been a choppy day ever since those Fed minutes came out at 2 o'clock Wall Street time. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading lower, helped by those minutes from the FOMC. Dow's currently down 145 points. S&P's dropped 14. NASDAQ is lower just by 3. The Fed reported that some said it would be prudent to prepare for a taper relatively soon. The U.S. 10-year yield at 1.27%. Gold is little change. Transports fall 16, and Bitcoin is trading higher by 1%. Among the main 11 S&P sectors, only consumer discretionary and telecom were in the green. Energy was under pressure again, and leaders to the upside in the Dow, Salesforce and Home Depot, while Apple and IBM led to the downside. After earnings, Lowe's jumped 11%, Target dropped 2%, and in deal news, CME Group denied a report of a bid for CBOE Global Markets. Wrapping things up, Robinhood reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, thank you so much. So among our most read stories on the Bloomberg today, it's about the two women who helped bring about a turnaround when it came to Airbnb's use of arbitration. Our Olivia Carville has been all over this story. It was her Bloomberg Business Week cover story, Tim, an investigation of violent crimes at Airbnb listings that really brought all of this to surface about how they used forced arbitration.
Well, it was a fantastic cover story, and the coverage since then has been phenomenal. And when we use the word impact, we absolutely mean it when it comes to this story. Olivia Carville joins us now. She's technology reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. Olivia, I want to start with the news. 2 sexual assault survivors, they have spurred Airbnb arbitration turnaround. Who are these women and how did they do it?
Yeah, well, thanks so much for having me on. These 2 women are incredibly brave. One is Sherry Dooley. She's a 55-year-old woman from Portland, Oregon. She's a food truck worker, and she traveled down to Colima in Mexico, where she says she was raped by an intruder who climbed through a window that wouldn't lock in the Airbnb apartment that she had rented. The second woman is Natalie White. She's 23. She's from Atlantic City in New Jersey, and she says that during a stay in an Airbnb property in February of this year, as she was packing up her belongings to leave, the host arrived at the property and sexually assaulted her. He pinned her down. He tried to tear her clothes off as she tried to resist him. Both of these women filed lawsuits against Airbnb in recent months.
And what was their experience, though, in terms of dealing with the company after those assaults?
Well, the company has an elite safety team that immediately activates to help survivors when things go wrong inside their listings. So the company did support both of these women. They helped pay for their flights home. They refunded the trips. They offered health counseling costs.
Sounds really great.
Yeah, it does. And then, months later after the attack, when they're dealing with the PTSD and thinking about what happened and questioning Airbnb's role in all this, both women decided that they did want to file claims against the company for damages.
But what is the fine print when you agree to stay in an Airbnb about how Airbnb is held liable?
Yeah, and that's the crux of this whole story, is that buried inside their 10,000-word terms of service agreement that every user who has ever signed up for the platform signed.
Look, I've used Airbnb. I didn't ever read it, and you click it and you agree to it.
So do I.
Because you have to, right, in order to use the service.
You have
Any
to.
service.
Right.
Right.
Exactly. And this isn't just an Airbnb thing. It's when you sign up for apps online, there's terms of service agreements that you sign. The problem is that they're 40 pages long, and who has time to read through them when you just want to book a property for a holiday? So, both of these women signed that terms of service without realizing that it comes with a binding arbitration agreement. What that means is that if there's any dispute with the company, any problem that arises during a stay, you cannot file damages in court. You are forced to arbitrate. And arbitration means it's handled behind closed doors. It's not in the courts. It is not in the public eye.
And to be fair, Airbnb, in terms of binding arbitration, not the only company, certainly in corporate America, that does this. We've talked a lot about financial community, right, that uses this. It's kind of a common practice, it seems, at a lot of companies once you either are employed there, right, in terms of your rights going forward. In this case, though, it sounds like Airbnb, because of these women, because of your reporting, kind of had a change of thought.
Yeah, that's right. And mandatory arbitration has been a flashpoint in corporate America ever since the Me Too movement. We've seen a lot of companies change their arbitration agreements, particularly when it comes to sexual assault cases, because advocates say that if you're going to push a survivor into arbitration and not allow her to access the public court system, you are in a way silencing her voice, re-victimizing her by stripping her of that agency of choice. And so when both of these women decided to speak publicly and call on the company to give them the right to sue, to give them the right to go to court, Airbnb did decide to change its terms of service. It's going to be updating its terms of service this fall to eliminate forced arbitration for all sexual assault survivors going forward.
Olivia, this reporting, it's read, it's seen, it's heard far and wide since you did that cover story for Bloomberg Businessweek a few months ago about this elite safety team. I'm wondering what you've heard from survivors in the wake of this, what you've heard from sources, what you've heard from companies as you've continued to report this out.
I think for companies, it's been a wake-up call. A lot of other organisations in the short-term rental space have been following closely to the coverage, and some have actually changed their own internal policies. We saw Expedia and TripAdvisor both update their policies around the key exchange process, which is how hosts and guests exchange keys, to say that cannot be done in a public place, because we reported about a young woman who was raped when a man obtained a spare set of keys to the Airbnb she was staying in. So I think from the corporation sense, they have been, listening and reading these stories and doing what they can to try and, strengthen their safety policies. From the survivor standpoint, I think that for a lot of these women, it's the feeling like they're being heard. And some of them felt like the way the company's policies were set up, particularly around forced arbitration, that it did silence their voice. And, Natalie White, the youngest survivor in this story, she wrote a statement to me when she called for Airbnb to change this policy, and it said, "I beg you, do not silence our stories and our quest for justice." So they feel heard.
Well, thank you, because they are heard and have been heard because also of your investigation and reporting. Olivia Carville, she's technology reporter at Bloomberg News in our interactive broker studio. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Oh, hey, you are listening to Bloomberg Business Week. There's a lot going on.
There is a lot going on. We're talking about the Fed. We're trying to prepare for Dave Wilson's Song of the Day. Carol, yesterday it was Hall & Oates. I didn't get it. And I thought of you because...
Are you kidding me?
No, Dave gave me so many hints.
That's it. We're
I know.
done.
Are you just sending... I'm like,
You're
it's
out.
my turn to leave.
Which song did you miss? Which song did he miss,
What did I
Dave?
miss, Dave? I had this...
So close.
So close.
So close.
Yes, so
close.
far away.
Yes, so far away. Well, hopefully you'll do better this time around. All right, let's get a check on the trading day. 29 minutes to go, Charlie Pellet.
Indeed, and we are so far away from our highs of the day right now. We've got the Dow, the S&P, NASDAQ, all at their worst level of the session. 28 minutes to go, right to the numbers. We'll give you some color in a moment here with the S&P down 28, 44.19, drop now of 0.6%. The Dow down 238, down 0.7%. The NASDAQ Composite Index down 52, drop there of 0.4%. 10 years down 3/30 seconds, 10-year yield 1.27%. Stocks fell after the Fed signaled that a formal decision on a reduction of its massive bond buying program could happen in 2021. Again, the S&P extending losses into a second day, down 0.6%. S&P at 44.19. Gold is a little changed right now, up 60 cents, 17.86 the ounce. West Texas Intermediate crude 64.92, down now by 2.5%. WTI falling back below $65 a barrel. The SEC has announced insider trading charges against 3 former Netflix software engineers and 2 close associates who generated over $3 million in total profits by trading on confidential information about Netflix's subscriber growth. The Biden administration will start offering booster shots in late September to all vaccinated Americans as the coronavirus Delta variant continues its nationwide spread. The president is scheduled to deliver remarks just about an hour from now. We'll have those for you live here on Bloomberg Radio. It comes as hospitals are running out of intensive care beds in the South, but vaccination rates there are picking up. Dr. Baxi Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
The silver lining really here is that we are busting that myth. COVID is a real disease that gets people really sick, and vaccines protect against those real diseases that get you really sick. So the silver lining is we're now taking COVID seriously, which means people are getting vaccinated. Will it be adequate? I don't know.
Bhakti Hansati with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares down now by 1.8%. Its German partner BioNTech, the ADRs there down 1.3%. AstraZeneca ADRs up 0.3%. Moderna out of Cambridge down 1%. Johnson & Johnson down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. This is Nancy Lyons.
Nancy Lyons.
Bailing you out.
Nancy Lyons bailed me out. She got it. And had, you know what?
And the song is? Did she give you that?
No, but she knows it's the weekend.
Nancy Lyons, you are so
Thank
cool,
you.
man.
Okay.
Blinded by the light.
Blinding Lights. You were close.
That was a...
You know, I was all set because if you look at the chart headline, it says Great Divide, and I was all set to play Willie Nelson's song with that title. But here's the thing. I ran across a list today of songs that have spent the most weeks on the Billboard Hot 100, and Blinding Lights just became the record holder.
Nice.
Well, so it's really pathetic. That
The Weeknd kind of live in a weekend every day.
88 weeks in the Hot 100.
Where are we living?
Okay.
Where we're not getting that.
Tim, here's a... you want a shot at redemption?
Yeah.
Okay.
We need a
Which
manager.
song did Blinding Lights succeed? In other words, who held the previous record? What song?
Man or woman?
Band.
Do we know them?
The peak date was in 2013, so
2013?
yeah, it's a relatively recent arrival.
It's 8 years ago.
Yeah, relatively recent.
I mean, come on, Dave. Where were you in 2013?
Who is it, Dave?
Radioactive by Imagine Dragons.
Yeah,
I wouldn't have gotten that
wouldn't
one.
have gotten that one.
I hadn't even heard it, frankly, before
Nancy Lyons would have
played
gotten it.
Yeah, maybe so.
The problem with this stuff is I'm not cool.
Wow.
That's the problem.
You're kind of cool.
You want to know what's not
Your
cool?
music
Tell me.
education
I'll
is
tell you
there.
what. Growth stocks in the Russell 2000 index. They are not cool.
There we go.
Yesterday, Carol, I was talking about how if you looked at the Russell 1000 index, bigger companies, you would see that growth stocks and value stocks pretty much delivering the same performance this year. There's been some serious catch-up going on.
Mm-hmm.
You have not seen that with smaller companies in the Russell 2000, not even close. I mean, the growth index, as of yesterday, was only up 1.3% for the year.
Wow.
And it was trailing the Russell 1000 value index by about 19 points. Now, it's not unusual on a year-end basis to see that kind of a gap. It's just interesting to contrast what's going on with larger companies where, you've seen like the big tech stocks kind of come back, and growth has really kind of had a bit of a renaissance lately. And you haven't had anything comparable with the smaller companies. I mean, different mix of shares for sure, and that no doubt plays into it. But, it's something to note that, growth versus value is not as simple as it might seem when you compare them. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Which always reminds me that, we talk about an index and we'll say small caps are pulling back, but you've really got to be, as you increasingly remind us or constantly remind us, you've got to really dig into the index to figure out which sectors are doing what.
Yeah, where is it coming from?
Right.
What are the issues? Because, we've been talking about 5 stocks for years and years. Basically, the members of the $1 trillion club within the S&P 500. And, there's a whole lot more going on. And that's why, every day it's like, okay, look at the main industry groups. How are they doing?
Exactly.
You're trying to get a sense of really where the movement is.
Dave, give us your stock of the day.
Okay, I'll do that for you, Tim. It's a company called CDK Global. Ticker, surprise, surprise, CDK. It's a company that makes software for auto dealers of all kinds. And let's just say their latest quarterly numbers didn't go over well. They were out, late yesterday. You had earnings come up just short of analyst average estimate in the Bloomberg survey. You had revenue lower than projected as well. When you put it all together, you're talking about CDK Global at the moment being down about 8%, which doesn't sound like a whole lot, except when you look at the shares and realize they're at their lowest price in more than a year.
Good stuff.
Down 19% this year.
Think about how the auto industry is doing. This
Totally.
company certainly isn't benefiting from that.
All right. Thank you so much. Dave Wilson, check out his stock of the day. You can find that just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter @TheOneDave. Now it's to the woman who just is
has
so
all
cool.
The answers.
You
Nancy Lyons
are.
in DC. Thank you, Nancy.
I wouldn't go that far. The Defense Department remains laser focused on evacuations at the airport in Kabul, Afghanistan. That is how Defense Secretary Lloyd Austin opened a Pentagon briefing this afternoon that's still underway. He says U.S. forces are maintaining a safe and secure environment at the airport.
We will continue to coordinate and deconflict with the Taliban and make sure that those people that need to get to the airfield have the right credentials to ensure passage, and the Taliban has been checking those credentials, and if they have them, they have allowed them to pass.
Austin praised American troops for exceptional efforts under challenging circumstances. The Biden administration has frozen the assets of Afghanistan's central bank and is being asked to press the International Monetary Fund to also deny access to the Taliban regime. Bloomberg's Irv Chapman with more on that.
The burden is on the Taliban to win back the right to international financial flows, former Treasury Secretary Jack Lew said in a Bloomberg interview.
We have too much experience from the past to take their word that anything is going to be different. Whether or not to treat the government as a legitimate government going to come. Has to come after there's more evidence of what that government is going to do.
Afghan currency has dropped to a record low against the dollar since the Taliban advanced on Kabul. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, the coolest woman alive.
I know. She's got to be. I love that we have this chat going where she can just like help us out.
I not see it.
Send me a lifeline at 3:31 Eastern time.
Can I call a friend, Nancy
Yeah.
Lyons, for some help? Talking about, we're going to kind of switch gears here a little bit. On the Bloomberg by Jeremy Hill and Jeff Feely is a story about Purdue Pharma's ongoing bankruptcy trial, getting off to a tense start today with the former president, Richard Sackler, asserting ignorance of how many people have died from OxyContin, of course, the drug maker's addictive painkiller.
Yeah, Sackler's one of the sons of Purdue co-founder Raymond Sackler, and served as the company's president in the early 2000s, sat on its board for almost 3 decades. His testimony in the case is a rare public appearance, and it follows that of his own son, David Sackler. On Tuesday, now at the start, Carol, of the 5-day bankruptcy settlement trial, Maryland Assistant AG Brian Edmonds pressed Sackler on the the public health fallout from opioid use. When asked if he knew how many people had died from misuse of OxyContin in the U.S., Sackler said simply, "I don't know."
And this is getting to certainly this case of what did you know, when did you know it, what did you do maybe in terms of wrong business practices. We know members of the Sackler family that own Purdue Pharma, including David and Richard, have come under intense public scrutiny in recent years for OxyContin's role in the opioid crisis. We've talked about it. All news organizations have talked about it because it's been such a problem and a sad one at that. They've denied doing anything illegal while overseeing the company. But, this is, again, of what did the company know in terms of the addictive qualities, pushing the product. There's a lot that we still are, I guess, figuring out.
Yeah, the company is seeking bankruptcy court approval of a settlement that would dedicate the company's assets to fighting the crisis and would see Sackler family members pay some $4.3 billion over the next 10 years for broad legal protections from opioid lawsuits.
And here's the stat, folks. About 500,000 people died from opioid overdoses, including prescription and illicit opioids from 1999 to 2019. That's according to the CDC. A lot of people.
Yeah, it is. We're just talking with Dr. Hazeltine about this earlier in the day.
It's a tough situation. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks drop, bonds waver, S&P extending losses into a second day after the Federal Reserve signaled that a decision on a reduction of its massive bond buying program could happen in 2021. Treasuries and the dollar fluctuated. Right now, we do have the 10-year down 4/30 seconds, 10-year yield 1.27%. Equities, worst level of the session, 13 minutes to go ahead of that closing bell. S&P down another 34 points now, down by about 0.8%. We've got the Dow down 283. That is a drop of 0.8%. The NASDAQ Composite Index down 81, drop there of 0.6. Again, that 10-year down 5/30 seconds, 10-year yield 1.27%. Gold is down by $1 the ounce. Spot gold now at $17.8533. West Texas Intermediate crude with a 64 handle back below $65. $64.88 a barrel. WTI down now by 2.6%. Lots of earnings after the closing bell. Among them, Robinhood up by 7% right now. We'll be hearing from Cisco Systems down 1.5% right now. NVIDIA also reporting after the closing bell down 1.9%. Recapping stock sell-off, the Dow just dropping now by 305. Selling intensifying. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, folks, just about 10.5 minutes left in today's trading day. It's been a busy one, chock full of Fed minutes from that last Fed meeting. We're ahead of next week's Jackson Hole meeting, and we are thinking a lot about...
Are you going to be there, Carol?
I didn't get that. I didn't see that memo. But I know we'll be covering it big time. And we know somebody will be following it, is our Doug Sioka. Not ours, but he's a frequent guest. We like to call him ours.
He's ours?
He is ours.
Right, Doug?
He's CEO and partner at Kavar
flattered.
Capital Partners, $1 billion in assets under management. On the phone in New York City. What are you doing in New York?
I'm here to see some clients, and I was saying to Paul right before we went on, I am so impressed with how beautiful the city is, and what you hear in the middle of America is not what I found when I hit Midtown, and from the landscape, the buildings, the park, the people. I mean, New York seems pre-pandemic plus. So congrats to your city. It is awesome.
Oh, thank you so much. This is just fantastic to hear. We don't get many. Tourism is down so much.
Yeah.
And the image that's being portrayed about New York is so different than what we experience every day. So that's really nice to hear, Doug.
No, absolutely. It's fun to be here. Thank you.
So let's talk about the Fed meeting, the Fed minutes that we saw earlier today. I mean, what really sticks out to me is this caveat about the ongoing removing monetary stimulus, right? The caveat of the Delta variant, because this meeting was July 27th and 28th. And think about where we are now on August 18th. The Delta variant is much more of a concern than it was just a few weeks ago.
Yeah, and I think the market is probably pricing in a not inappropriate, mildly negative reaction to the minutes. And I'm sure you've had guests that have used this snappy line throughout the day, but tapering is not tightening. And I think their action at best, as they've laid it out, conservatively is equal and opposite to the underlying strength we've seen in the economy, the job market, and maybe most of all the housing market. Then I think there has to be a great deal of latitude or wiggle room in the language. It's appropriate given this COVID curveball. And let's not also dismiss the fact that the Fed, in particularly the Fed chair, needs to attempt to really thread the needle on his communique if he is to appeal to both parties in consideration of a reappointment process that is only 6 months away at this point in time. So stocks are pulling back a bit, but if you look at the bond market and currency market, bonds and the dollar are barely budging.
Exactly. And so is that what you watch much more closely, what's going on in the currency market, what's going on in the treasury market, to really get an indication, Doug, of what might come next in terms of Fed policy?
Yeah, you tend to think of both fixed income and currency markets as a little more cold-hearted and calculating,
Right.
and stocks is more like temperamental children that are difficult to sort of gauge their sort of long-term contribution based on their short-term behavior. But I think, if anything, right, the Fed should be given credit for being pretty prescient in using that transitory term, given the rally in fixed income that we've seen from February through today. Right. I mean, when the Fed was saying this is a transitory issue, we may not see the perpetuation of growth rates at these levels. We may see a hiccup in the job market. We aren't entirely sure of the adverse consequences of COVID. And we've seen this massive bond market rally, right? 172 to the 10s to 127 a day after it hit 117. So I think the Fed has earned a little credibility in currency and fixed income markets for sure.
So what are you watching for to hear from the Fed when we hear from Jay Powell, or I shouldn't say the Fed, but when we hear from Jay Powell next week in Jackson Hole?
Yeah, I think just more of the same. Tim, you made a very good point. As much as this data is already stale, so the rearview mirror-esque element of not really understanding where we are in kind of the COVID cycle at this point in time. And I think it's interesting because we see numbers that would lead us to believe that we're peaking. We know that a lot of, sadly, the fatality numbers are lagging. We've actually seen elevation of vaccines. We've seen clearance now for the booster. There's a lot of new data on the table, and I hate to say that we become accustomed to being confused, but I can't imagine that the description of where we are is going to be much less ambiguous than it was in these minutes.
What's interesting, too, though, Doug, is, yes, from 2 weeks ago, 3 weeks ago, from 4 weeks ago, I think there wasn't a lot of market anticipation that the Delta variant was going to be this troubling. But now we've seen a rollback of people going in terms of offices. We are back wearing masks in our office at this point. But what's interesting is, and there was a guest, Alicia Levine at BNY Mellon earlier on Bloomberg TV with Jonathan Farrow, and said, the new risk in the marketplace basically is this variable that wasn't so much on our radar a few months ago. It's now front and center. But she's asking, is there a way out of this, meaning the Delta variant? And there is. It's called the booster shot. And how, important is it that if we all start to get boosters and there's confidence back, do things start to look more like they have been in the last couple of months versus how they looked a year ago?
Yeah, I mean, the big question, right, it's kind of like the swing voter conundrum in a presidential election. Like, are we going to get any COVID vaccine convertees? They're going to say, okay, now I understand I'm going to get the booster. Now, thankfully, as you guys know, the disproportionate number of infections are those that have not been vaccinated.
Right.
Certainly those that are the intensity are those that have not been vaccinated. So the breakthrough is certainly troubling. I think hopefully what the booster does is it's a shot in the arm, huge pun intended, for confidence to resume activity because there are going to be more variants.
Right.
So we've already started to scratch the surface of what the Lambda is. And frankly, I think people have COVID fatigue to a certain respect. And in my comments earlier about New York City, I mean, it is very vibrant, right? So there are more masks than I'm sure we would have seen if I were here 3 or 4 weeks ago. But I think people have kind of resolved themselves to the fact that this is something we're going to have to deal with. There doesn't seem any anecdotal reduction in a very small spot sample size. Where I spend my time in Kansas City, and certainly not on the ground in New York City. I'd been in Boston the week before, and there's a lot of underlying activity and still a lot of pent-up consumer demand that I think is manifesting itself.
Okay, just to play devil's advocate, we're getting to back-to-school season. There are no shots available for kids under 12 years old right now. This week in New York City, you have to show, starting on Monday, you had to show proof of vaccination to eat at restaurants. Does this hit consumer spending?
I don't know that it hits it, Kim, as much as it modifies it. So yes, but. Right. I mean, I think what we've also become accustomed to is that reliance upon the gig economy. And it is kind of interesting to look today and see some of the stocks that are higher in kind of a generally negative tape. And I think we know that we may have overcorrected for some of those stocks that we relied upon to get us out of the depths of the pandemic that were kind of a little bit forgotten about, that now knock on people's forefront of their mind of balancing between full engagement and 1 foot back into where we were before in somewhat of a lockdown fashion.
All right. Having said all of this, I bet you're just kind of hoping for a little bit of a pullback so you can have a lower entry point at this point, certainly for some equities.
Oh, there's no question. I think we are like everyone. Like we're assuming we're going to get a decent pullback. We haven't had a 5% correction in almost a year. I will point out something that's really fascinating, right? So far for the year, the biggest drawdown has been just a little over 4%. As we know, going back to 1980, we'd expect in any calendar year about minus 14%. The average stock of the S&P 500 has actually had just a little over a 14% drop in 2021. just hasn't been coordinated during kind of a general risk-off event.
Right.
So we found pockets. So that's one of the reasons I think the market doesn't get that full catharsis, because there's too much money that's waiting to hit it.
All right.
Well, starts this to show a little pullback.
Stay safe, Doug Sioka, and have fun while you're in New York City. It is an amazing city, and it does feel pretty good right now. Doug Sioka, he's CEO and partner at Kavar Capital Partners, with us on the phone in New York City today. All right, we've just got a few minutes left in today's trading session, and we obviously are going to be talking about those Fed minutes, as well as we've got some big earnings, including Cisco and Robinhood, after the closing bell. So coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and on YouTube. We're counting you down to the closing bell on this, Fed Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 44.01 on the S&P 500, moving towards the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast, Carol Massar, Tim Stenovic, joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, right now we are looking at stocks at the lows of the day.
We are indeed, and maybe we can thank the Fed for that. We just got those Fed minutes just a couple of hours ago. That is for that late July meeting, and basically showing that most Fed members talking about the possibility of Fed tapering by the end of the year. But keep in mind, there is a wide divergence taper when it comes, Taylor, when it comes to the opinions about what the Fed will do next and where rates are headed.
And certainly Mike McKee joined us and had some interesting comments about equal taper suggestion between MBS and Treasuries, of which Caroline and I have been so focused on. It is Bob Miller over at BlackRock who writes in and signals that really it's the meaningful progress on that inflation objective, not the labor market, but the inflation objective that takes us up to a 127 on the 10-year.
Yeah, we just spoke to Doug Sioka, Chief Executive Officer and partner at Kavar Capital Partners, Caroline, and he made the really good point that, tapering is not tightening. It's something that we hear a lot. And also the bonds and the dollar are barely budging after this.
Yeah, there was a sort of immediate knee-jerk reaction, but then we went back to the trade that had been on all day. Down go stocks, whether it's a filtering in also of that Delta variant. We know that inherently the July meeting is backward looking. What are they now seeing in terms of the concerns around the ongoing economic hit from Delta variant? We heard Chair Powell speak to that yesterday. He doesn't know what that economic impact will be.
All right, we are getting the closing bells. We should point out the S&P 500 just now breaking below 4,400 here. Obviously, these numbers will take a moment to settle, but you're looking at S&P 500 down about 1.1%, down about 48 points. We should also point out, too, some of these technical levels are important. The S&P 500 right now is actually going to close below that 20-day moving average. The NASDAQ composite not faring much better here, down about 0.9%, and that index right now is below its 50-day moving average. Let's take a quick look. The Dow Jones Industrial Average down about 1% on the day, but let's take a look at the Russell 2000 here, because I thought this was an interesting move late into the day. The Russell, of course, has been a bit of a laggard here for the last few weeks here. It is down 0.8% here on the day. Its 200-day moving average is 21.49. It's closing right now at around 21.59. So just a hair's breadth above that 200-day moving average. And Carol, this really now becomes a story about momentum rather than fundamentals.
Yeah, it's like what the technicians would say, let's focus on these levels, because whether or not we continue to the downside. Just want to mention the S&P 500, folks, overwhelmingly to the downside. 450 names in the S&P lower today. 53 higher, Taylor. So no doubt about it, the equity markets, how investors were thinking.
Sorry, Taylor, and just to point out, I mean, that's a great point, Carol, but just how much this intensified, because, Taylor, when you looked at the market earlier today, it was kind of half and half. You had about half the stocks in S&P up, but as we got into that final hour, final 45 minutes, things really intensified to the downside.
Yeah, and I love that both of you are really bringing that up, because for a radio audience, I'm showing the individual sectors, right? The gainers and the losers. It's red across the board. There's only one gainer. Let's start, Carol, because you really highlighted here with the Russell, the end of that reflationary trade that we've started to talk about, with crude dipping below $65 a barrel at one point. It is the energy sector off 2.5%, by far the worst performer, as you're getting sort of a rotation out of some of these cyclical stocks. We try to go to the positive. Frankly, everything is still in the red. Retail, utilities, even media, of course, in the red. The only thing in the green, 2.6% higher. Auto and some of the semi-components within autos, something I know that we'll continue to talk about, Carol.
All right, guys. Taylor, I found some green lows. You guys were breaking down the earnings, or they were breaking it down earlier here on Bloomberg. Up 9.6% today, just off its highs. So Lowe's certainly one of the outperformers, topping the S&P 500. Second quarter results proved better than feared, according to Wells Fargo. And that, of course, was coming after Home Depot's disappointment. Got to mention Tesla topping the NASDAQ 100 after being down about 7% over the past 2 days. Some news about senators urging the FTC to investigate whether Tesla uses deceptive marketing practices when it comes to its autopilot. So that is still on everyone's radar, up 3.5%. But keep in mind, tomorrow is Tesla AI Day, so that could be a mover for the stock. So maybe investors looking ahead to that. TJX, got to mention, top of the S&P 500, second quarter net sales beat, same-store sales beat for me, outfitting a college student over the last couple of days. TJX should send me a thank you note, Tim.
Well, maybe you should have done some of the shopping at Target. It is one of my decliners that I'm keeping an eye on today. The company did report earnings this morning, and they were pretty good. I mean, same-store sales growth came in at 8.9%, but you know what? Expectations were certainly high. E-commerce revenue rose by about 10%, but remember, after nearly tripling a year ago, finishing the day down 2.78%. Moderna down just about close to 0.8%. It regained some of its lows earlier in the session, this despite the fact that the Biden administration will be starting late next month, about a month from now. For those of us who got mRNA vaccines, we will be eligible for boosters. We should take note, though, that Moderna is higher by about 275% so far this year, so a decline like this is nothing to write home about. CME Group, down in the news that the company approached Cboe Global Markets, the owner of the VIX Volatility Indexes, about an all-share deal to acquire it for nearly $16 billion. It was down more than 4.5%. Then CME Group denied the report, shares finishing the day down 3.8%.
Forcefully denying it. And you know what, CME Group, you can go over and do is trade oil futures, commodities. Let's look at commodities right now, because I'm looking at a vertical that is red across the board. It feels to me as though the commodity market is trying to tell us how worried they are about the COVID variants, about the global concern of this becoming yet again a serious downdraft on the economic growth story that we've sort of grown accustomed to. We saw oil tick lower, below $65 is currently where we are on WTI crude. Haven't seen that several months, 2.5% lower. Brent crude also off by 1.9%, but really steel feeling the blowback as well. We're also seeing, though, on the FX market, the Kiwi, that's where we're seeing some pain. Dollar actually remained higher. We got some breaking news, I think.
Not that I can see, Caroline.
Apologies, I had something in my ear. Meanwhile, though, Taylor, you can do what's great is the yield story.
Yeah, Caroline, thank you for that. Of course, as we take a look at where we are, really was the stability of the yields that we can see, where really you had yields much higher on the day. You're getting some calmness in the bond market as some of the losses on bond price that tapers off. And so you're getting a 127 on the 10-year, a 191 on the 30-year. And this really, Carol, sort of highlights where we wanted to go with the calmness in the bond market, what that means from the Fed meeting minutes that we got today. Of course, our reporting showing up that the meetings don't seem to set up taper as early as September, perhaps maybe later in the year.
Yeah, Cisco earnings out, Robinhood earnings out, Cisco earnings providing a little bit of a forecast here. 1Q revenue 7.5% to 9.5%. The street was looking for about 7.7%. We'll go through the rest of those numbers on Cisco. On the top line, they do look like a beat here and a slight raise. Robinhood earnings, though, crossing the wire right now as well.
Yeah, and we're seeing that stock down in the after hours already. Robinhood a little bit lower here. Let's go through. Second quarter loss of $502 million. Reported a preliminary loss of $487 to $537 million. Second quarter monthly active users, 21.3 million. That's certainly a metric that the street's going to be interested in. Second quarter adjusted EBITDA of $90 million, and second quarter total revenue, $565 million, the estimate of $559.5. This is the first report since the company has gone public. Keep in mind that there's not a lot of analyst coverage because they haven't been able to do it because they were involved potentially in that in terms of the offering. So we don't have a lot of estimates to play around with.
Cryptocurrencies is going to be where, of course, they've got to substantiate some of their growth and vindicate their overall valuation. Cryptocurrencies increased to $233 million in the second quarter of 2021, so says the press release, compared to just $5 million the previous year. So this is where we're starting to see their focus, because options increased 48%, so some of that more riskier trading going on from the retail community, up 48% to $165 million. Equity transaction, the revenue actually fell overall, Tim, 26%. So So, but it's the pace of transactions that we want to be seeing. And of course, payment for order flow, that's the key question mark.
Well, that's the thing. I mean, the company makes 80% of its revenue from payment for order flow. So it needs to get people to trade in order to actually make money. To what extent is the trading activity going to continue post-pandemic? Where are we with it right now? And then there's a lot of competition out there. It's not just the startups like Public, but it's also Charles Schwab, TD Ameritrade, and more that are offering the similar products. So how does Robinhood diversify? How does it grow and get more people doing more trading to
I
increase
think
that payment for order
the
flow?
commentary that we get out of this company, particularly with regards to the sort of the longer term business strategy here, is it sort of tied and tethered strictly to those retail traders, strictly to those equity traders, or do they move a little bit more towards the institutional side, which of course would lend a little bit more heft to the business, but not necessarily profitability. Of course, those institutional investors, you can't really squeeze as much out of them as you can some of the retail traders.
It is really fascinating indeed as we're sifting through the press release. On one half, the numbers look good. When you've monthly active users up 109%, you've doubled from 10.2 million to 21.3 million. But Carol, what catches my eye is the average revenue per user. $112 in the second quarter, and that's down from $115 in the previous year. So you're seeing a decline in average revenue per user.
Don't hate me. I'm going back to Cisco because it's down about 1.6%, 1.8%. I mean, it's a massive company, and this whole world is connected by so many different Cisco products. And I think some, concerns about what the company is saying. First quarter revenue up 7.5% to 9.5%. Estimate was 7.7. It's quite a range that they're putting out there. And again, their first quarter revenue, as we just said, that range is maybe why we're seeing some disappointment. I mean, this is what we want to see, what companies are saying about the future business, and maybe it gives us some indication about the economic outlook. So Robinhood and Cisco down in the after hours. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow, everyone.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, I didn't mean to rain on the Robinhood parade. Company saying seasonal headwinds to result in lower third quarter revenue. So it's an important one. Cisco's about 4 times the size.
Yeah, that's very important.
Or 3 times the size.
Robinhood, they're getting a lot of attention because this is the company's first earnings report since it went public, and it was a really shaky IPO.
Yeah, exactly. And you do wonder about these disruptors, whether ultimately they stick around. You're not sticking around.
I'm not. I'll see you tomorrow.
Okay, have a good night.
Thank you.
All right, let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Pentagon officials say they did not foresee such a quick collapse of the Afghan military as American troops withdrew from the country. Defense Secretary Lloyd Austin says U.S. troops are now committed to one very singular mission.
We remain laser focused right now on Hamid Karzai International Airport in Kabul and on doing everything that we can to continue evacuating Americans, allies, Afghans.
Austin says there have been no hostile interactions with the Taliban. President Biden in a few minutes will be addressing his administration's new policy concerning coronavirus booster shots. Earlier today, Surgeon General Vivek Murthy said boosters are needed with immunity showing signs of waning. He outlines the new guidance.
They would be eligible for their booster shot 8 months after receiving their second dose of the Pfizer or Moderna mRNA vaccines. We plan to start this program the week of September 20th, 2021.
Murthy says the boosters will mostly go first to healthcare providers and nursing home residents, since they were the ones who received the first vaccines. The former president and board chair of Purdue Pharma, the company they made OxyContin, told a court today he and his family and the company are not responsible for the opioid crisis. Richard Sackler's denial of responsibility comes a day after another Sackler family member said the group would not accept a settlement without guarantees of immunity from further legal action. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Masser in our Interactive Brokers studio. Joining me is Charlie Pellet of Bloomberg News. Charlie, we've got to just talk a little bit more about Robinhood and Cisco. Both are down in the after hours. Robinhood shares down just under 2%, and we've got Cisco down 2.3%, both of them just coming out with earnings.
Indeed, and with Robinhood, let's begin there, Carol.
Sure.
We've got Robinhood saying seasonal headwinds will result in lower third quarter revenue. As you mentioned, we do have Robinhood shares trading lower after hours. It also posted a bigger than expected loss during the quarter. So that's one that we're watching. And of course, the other one that we're also keeping an eye on after our Cisco Systems.
Yeah, down 2.1%. Massive company when you think about telecommunications, infrastructure, networking. And the big red headline that we've got on the Bloomberg is it's talking about the outlook. They just reported for the fourth quarter. So the outlook is for the first quarter, the current quarter. And they see first quarter revenue up 7.5% to 9.5%. That's a pretty decent range. The estimate is for a gain of up 7.7%. So maybe it's that lower range that is worrying investors. Also talking about fiscal year 2022 adjusted EPS of 338 to 345. The estimate out there is for 341. So again, giving a little bit of a lower range there. As for the fourth quarter adjusted EPS, it was a penny better than Wall Street was forecasting. Fourth quarter revenue, $13.1 billion. The estimate was for $13 billion. So Charlie, again, just a little bit higher than what the Street was forecasting.
Indeed, and keeping an eye on NVIDIA. That's the other major company that we're watching, scheduled to report after the closing bell. We've got our live blog up and running yet, but not seeing any headlines crossing yet on the Bloomberg Professional Service. But you and I will certainly be updating our listeners on NVIDIA's second quarter numbers as we get those crossing the Bloomberg.
Exactly. And Cisco's a name that's up about 23%. We're talking about a PE of 20, a forward-looking PE of about 16. So again, at this point, maybe investors are looking for a little bit more and certainly beats here, which is something that we've seen a lot throughout this latest earnings reporting season. Again, these are companies just kind of picking up the tail end of it. All right, Charlie, thank you so much. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of after-the-bell earnings. Let's begin with Robinhood. It says it sees seasonal headwinds resulting in lower third-quarter revenue. Also reporting after the bell, Cisco Systems. It sees first-quarter revenue in the range of 7.5% to 9.5%. Estimates were for 7.68%. Right now, we do have Cisco shares down by roughly 1.8%. Robinhood shares, after hours, they are trading higher. Robinhood advancing now by just about 3.3% after hours. Fed Wednesday, and we had the Dow, the S&P, NASDAQ not only dropping but closing at or near session lows. Stocks fell after the Federal Reserve signaled that a decision on a reduction of its massive bond buying program could happen in 2021. S&P down 47, a drop there of just about 1.1%. Today we had the NASDAQ Composite Index falling by 0.9%. Dow Industrials down 382, a drop there of 1.1%. 10-year yield 1.26%. Gold little change, down 33 cents, 17.85 the ounce. And West Texas Intermediate crude down 3%, 64.57 a barrel. We are still awaiting the latest numbers out of NVIDIA. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Shares of Cisco off their lows in the after hours, but still down about 1.3%. The company, it seems like there might be some disappointment about first quarter revenue. The forecast for up 7.5% to 9.5%. The estimate out there has been for 7.7%. So let's get some sense of what this quarter, the past quarter and the current quarter, what they look like. Woo Jin Ho is our Bloomberg Intelligence technology analyst joining us from our Bloomberg Intelligence headquarters. Woo Jin Ho, good to have you here with us. So walk us through the quarter. How does it look to you?
Sure. Hi, Carol. Thanks for having me on. So a couple of things. It's actually a tale of two cities here. The pent-up demand for network equipment actually came into fruition for this quarter as well as in the outlook. Now, what's unusual in the outlook is that they actually gave out full-year outlook, and this is something that Cisco does not typically do. And they gave out fiscal 22 outlook guidance of 5 to 7%. Consensus was at 5%, so they actually topped the consensus expectations for 2022. So the demand for their gear is good. Now the issue is that the supply chain is really crimping gross margin, and where they missed on the outlook for the first quarter outlook, they're coming at 64% gross margin for the first quarter. Consensus was at 65.
Okay.
And even though for fiscal 2022 they have a 1.5% revenue beat for 22, EPS is coming in line with consensus expectations. So,
it feels like, because when I first saw the numbers, to be fair, Woo-Jin, I didn't think it was that terrible, but it sounds like is that a fair assessment?
If we look at it strictly from a top line perspective,
yeah,
the numbers were great.
Okay,
right, but we're looking at it from an earnings growth perspective, and especially given what valuation was, we're talking about 16.6 times this forward PE, right? There was a lot of expectations of higher earnings after this. After they reported.
Right.
And that's not materializing into 2022.
Right. And so we saw applications revenue coming in light in the fourth quarter. I guess, so, as we dig into this a little bit deeper, and you're right, you need to understand kind of when it comes to margins and growth specifically, there is some disappointment. What does it tell you? Is it, again, what you said about just supply chain problems? That's where things are getting hung up?
Sure. So there's actually a couple of things going on here, right? On the supply chain side, they're not able to pass off the higher costs that they're assuming, number one. And what they did this past quarter, which was very strategic on their part, they actually doubled their purchasing equipment from $5 billion to $10 billion, just so that they have enough supply to fulfill their customer orders, right? I suspect that they had to pay a little bit more to be on the front of the line, right? And that's going to start shaving the gross margins. Now, I think when the models are all said and done, I suspect that gross margin is going to come down a little bit by about 50 basis points in fiscal 2022. But this is strictly a gross margin story that's probably going to sustain through the course of the year.
When you look at Cisco, I always wonder about suppliers to it or its customers. Does it tell you anything about other, if you spread the branches out, is there any other companies that we should be looking at, thinking about in terms of, as a result of what we heard from Cisco today?
Sure. So, Cisco has been a laggard. So there were actually a bunch of breadcrumbs coming into results that led to my conclusions to Cisco's and some of the analyst previews heading into the numbers. Now, the other two companies that have yet to report that are enterprise and consumer focused to some degree are HPQ Hewlett Packard Enterprise and Dell, and that's going to be another indicator of what's to come. Now, on the supply chain side, we have Broadcom reporting later in the month as well, and that will give us some supply side indicators for the rest of the space.
You were sitting down with the Cisco executives, the C-suite team, the CEO. What would you want to ask?
For me, it's going to be how long do they think that the gross margin erosion is going to last? That's one. And number two, in terms of the growth expectations, why wasn't it better? There's a lot of pent-up demand going on, and I understand that 5 to 7% is fantastic growth, but they have a lot of secular trends that tailwinds in their favor, and I would have thought that it might have been a little bit better than 5 to 7.
Great analysis. Thank you so much. You walked through all of it. Woo-Jin Ho, he is our Bloomberg Intelligence Technology Analyst, joining us on the phone from BI headquarters in Princeton, New Jersey. In the meantime, NVIDIA coming out, second quarter revenue, $6.51 billion. That is a beat, everyone. The estimate out there among the analysts we surveyed was for $6.33 billion. Second quarter adjusted gross margin, 66.7%. That, too, is coming in higher than forecast. The estimate was for 66.6%, so a slight beat there. And second quarter adjusted EPS, $1.04. That is 3 cents better than what Wall Street was forecasting. And for the outlook, it sees third quarter revenue $6.80 billion, plus or minus 2%. The estimate out there is for $6.54 billion. Quick check on what NVIDIA is doing in the after hours, and let me bring it up. It is down about 1.5%. So we're going to talk a little bit more about that company, follow the trade, and break down the earnings with our own Anand Srinivasan. And just want to see what the stock's been doing. It's been on a tear. We've talked about this before. Stock is up about 46% heading into these earnings. You are listening to Bloomberg Business Week. I'm Carol Masser, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week, and NVIDIA just out with their earnings. We've been watching the stock in the after hours. A little bit of a hit initially, but it looks like it's bouncing off its lows now. Just a little change here. It looks like it's now up about 0.6%. We are going to break that down in just a moment. In the meantime, off to the White House we go because President Biden getting ready to make some comments.
I'd like to make an important announcement today in our work to get every American vaccinated and protected from the Delta virus, the Delta variant of COVID-19. I just got a monthly briefing from my COVID team, and here's the latest data that confirms that we're still in a pandemic of the unvaccinated. While we're starting to see initial signs that cases may be declining in a few places, cases are still rising, especially among the unvaccinated. There are still 85 million Americans who are eligible to get vaccinated who remain unvaccinated and at real risk. Across the country, virtually all of the COVID-19 hospitalizations and deaths continue to be among the unvaccinated. In Alabama, more than 90% of the current hospitalizations are among the unvaccinated. In Texas, 95% of those in hospitals are unvaccinated. Right now, it's worse in states where overall vaccination rates are low. But let me be clear, even in states where the vaccination rate is high, the unvaccinated in those states are also at risk. And we're seeing cases rise as a result. Quite frankly, it's a tragedy. There are people who are dying and who will die who didn't have to. So please, if you haven't gotten vaccinated, do it now. Do it now. It could save your life, and it could save the lives of those you love. You know, and the good news is that more people are getting vaccinated. Overall, weekly new vaccinations are up more than 80% from where they were a month ago. While it can take up to 6 weeks to get fully protected after your first shot, this increased level of vaccinations are going to provide results in the weeks ahead. Just remember, we have two key ways of protecting ourselves against COVID-19. One, safe, free, and effective vaccines. And two, masks. Vaccines are the best defense, but masks are extremely helpful as well. And for those who aren't eligible for the vaccine yet, children under the age of 12, masks are the best available protection for them and the adults around them. That's why we need to make sure children are wearing masks in school. Before I talk about the news related to vaccines, let me say a few words about masks and our children. Unfortunately, as you've seen throughout this pandemic, some politicians are trying to turn public safety measures, that is, children wearing masks in school, into political disputes for their own political gain. Some are even trying to take power away from local educators by banning masks in schools. They're setting a dangerous tone. For example, last week at a school board meeting in Tennessee, protesters threatened doctors and nurses who were testifying, making the case for masking children in schools. The intimidation and the threats we're seeing across the country are wrong. They're unacceptable. Now, I've said before, this isn't about politics. It's about keeping our children safe. It's about taking on the virus together, united. I've made it clear that I'll stand with those who are trying to do the right thing. Last week, I called school superintendents in Florida and Arizona to thank them for doing the right thing and requiring masks in their schools. One of them said, "We teach science, so we follow the science." The other said, they have a guiding principle: students first. I couldn't agree with I just couldn't agree more with what they both said. And that's why today I'm directing the Secretary of Education, an educator himself, to take additional steps to protect our children. This includes using all of his oversight authorities and legal action, if appropriate, against governors who are trying to block and intimidate local school officials and educators. And as I said before, if you aren't going to fight COVID-19, at least get out of the way of everyone else who's trying. You know, we're not going to sit by as governors try to block and intimidate educators protecting our children. For example, if a governor wants to cut the pay of a hardworking education leader who requires masks in a classroom, the money from the American Rescue Plan can be used to pay that person's salary, 100%. I'm going to say a lot more about children in schools next week. But as we head into the school year, remember this. The Centers for Disease Control and Prevention, the CDC, says masks are critical, especially for those who are not yet vaccinated, like our children under the age of 12. So let's put politics aside. Let's follow the educators and the scientists who know a lot more about how to teach our children and keep them safe than any politician. This administration is always going to take the side of our children. Next, I want to talk to those of you who can get vaccinated, but you haven't. The Delta variant is twice as transmissible as the Alpha variant. It's dangerous, and it continues to spread. Vaccines are the key to stopping it. We're making progress. Today, more than 90% of seniors have at least had one shot, and 70% of people over the age of 12 have gotten their first shot as well. That's good news, but we need to go faster. That's why I'm taking steps on vaccination requirements where I can. Already I've outlined vaccine requirements that are going to reach millions of Americans, federal workers and contractors, medical staff caring for our veterans at VA hospitals, and our active duty military reservists and National Guard. Today I'm announcing a new step. If you work in a nursing home and serve people on Medicare or Medicaid, you will also be required to get vaccinated. More than 130,000 residents in nursing homes have sadly, over the period of this virus, passed away. At the same time, vaccination rates among nursing home staff significantly trail the rest of the country. The studies show that highly vaccinated nursing home staff is associated with at least 30% less COVID-19 cases among long-term care residents. With this announcement, I'm using the power of the federal government as a payer of health care costs to ensure we reduce those risks to our most vulnerable seniors. These steps are all about keeping people safe and out of harm's way. If you walk into a government office building, you should know that federal workers are doing everything possible to keep you safe. If you're a veteran seeking care at a VA hospital, you should not be at a greater risk walking into the hospital than you were outside the hospital. And now, if you visit, live, or work in a nursing home, you should not be at a high risk for contracting COVID from unvaccinated employees. While I'm mindful that my authority at the federal level is limited, I'm going to continue to look for ways to keep people safe and increase vaccination rates. And I'm pleased to see the private sector stepping up as well. In the last week, AT&T, Amtrak, McDonald's, they all announced vaccine requirements. I recently met with a group of business and education leaders from United Airlines to Kaiser Permanente to Howard University. We're also doing the same thing. Over 200 health systems, more than 50 in the past 2 weeks, have announced vaccine requirements. Colleges and universities are requiring more than 5 million students to be vaccinated as they return to classes this fall. All of this makes a difference. The Wall Street Journal reported the share of job postings stating that new hires must be vaccinated has nearly doubled in the past month. Governors and mayors in California, Maryland, Massachusetts, New York, Oregon, and Washington have all announced vaccination requirements. So let's be clear. Vaccination requirements have been around for decades. Students, healthcare professionals, our troops are typically required to receive vaccines to prevent everything from polio to smallpox to measles to mumps to rubella. In fact, the reason most people in America don't worry about polio, smallpox, measles, mumps, or rubella today is because of vaccines. It only makes sense to require a vaccine that stops the spread of COVID-19. And it's time for others to step up. Employers have more power today to end this pandemic than they have ever had before. My message is simple. Do the right thing for your employees, consumers, and your businesses. Let's remember, the key tool to keeping our economy going strong is to get people vaccinated and at work. I know that I'll have your back. They should know I'll have their back, as I have the back of the states trying to do the right thing as well. For example, yesterday, I instructed the Federal Emergency Management Agency, FEMA, to extend full reimbursement through the end of the year to state deployments of National Guard in support of COVID-19 response. Nearly 18,000 National Guard members are supporting our response nationwide, from caring for patients to administering vaccines to running testing sites to distributing supplies. As the states continue to recover from the economic toll left by COVID-19, the full reimbursement of National Guard services during this pandemic will be another tool that will help them shore up their budgets, meet the needs of their communities, and continue our economic recovery. These are the latest steps we're taking to get more people vaccinated. Next, I want to speak to you all of you who are vaccinated. How should you be thinking about the moment we're in? First, know that you're highly protected against severe illness and death from COVID-19. Only a small fraction of people going to the hospital today are those who have been vaccinated. But we have a responsibility to give the maximum amount of protection, all of you the maximum amount. Earlier today, our medical experts announced a plan for booster shots to every fully vaccinated American, adult American. You know, this will boost your immune response. It will increase your protection from COVID-19. And it's the best way to protect ourselves from new variants that could arise. The plan is for every adult to get a booster shot 8 months after you got your second shot. Pending approval from the Food and Drug Administration, the CDC's Committee of Outside Experts will be ready to start this booster program during the week of September 20, in which time anyone vaccinated on or before January 20 will be eligible to get a booster shot. So that means that if you got your second shot on February 15th, you're eligible to get your booster shot on October 15th. If you got your second shot on March 15th, go for your booster starting November 15th, and so on. Just remember, there's a simple rule. 8 months after your second shot, get a booster shot. These booster shots are free. We'll be able to get the booster shots at any one of approximately 80,000 vaccination locations nationwide. It will be easy. Just show your vaccination card and you'll get a booster. No other ID, no insurance, no state residency requirement. My administration has been planning for this possibility in this scenario for months. We purchased enough vaccine and vaccine supplies so that when your 8-month mark comes up, you'll be ready to get your vaccination free, that booster shot free, and we have it available. It will make you safer and for longer. And it will help us end the pandemic faster. Now, I know there's some world leaders who say America shouldn't get a third shot until other countries got their first shot. I disagree. We can take care of America and help the world at the same time. In June and July, America administered 50 million shots here in the United States, and we donated 100 million shots to other countries. That means that America has donated more vaccine to other countries than every other country in the world combined. During the coming months of fall and early winter, we expect to give out another about 100,000 boosters, and the United States will donate more than 200 million additional doses to other countries. This will keep us on our way to meeting our pledge of more than 600 million vaccine donations, over 500 million. As I said before, we're going to be the arsenal of vaccines to beat this pandemic as we were the arsenal of democracy to win World War II. So let me conclude with this. The threat of the Delta virus remains real, but we are prepared. We have the tools. We can do this. So all those of you who are unvaccinated, please get vaccinated for yourself and for your loved ones, your neighborhood, and for your community. And to the rest of America, this is no time to let our guard down. We just need to finish the job with science, with facts, and with confidence. And together, as the United States of America, we'll get this done. God bless you all, and may God protect our troops. Thank you.
And that is President Biden making some comments from the White House on this Wednesday, August 18th, 2021, about COVID and vaccinations. He says 2 key ways of protecting people against COVID. Vaccinations are the best defense. Masks are helpful, too. He's also directing the Education Secretary to take additional steps. This is some of the confusion, even chaos, if you will, in some states where governors are saying one thing, school systems are saying another, municipalities are saying another thing, and it's providing some confusion about what to do at the nation's school systems. He's also saying he's pleased to see the private sector stepping up as well. He says he will say more about children in schools specifically next week, certainly as the countdown continues here on the East Coast for kids to go back to school. We've already seen kids return to schools around the nation, certainly in some of those southern states. He says it makes sense to require a vaccine that stops the COVID spread. And then talking about highly anticipated, we expected it, we've been talking about it all day here on Bloomberg. About 8 months after you have had your second shot, you should get a booster shot. And talking about 80,000 vaccine locations nationwide that individuals can start doing that. He says the threat of the Delta remains real, but the United States is prepared. He says he can take care of America and also help the world at the same time. So talking about getting vaccines out to the rest of the world, continuing our responsibility there. In the meantime, let's bring in Joe Matthew, host of Sound On here on Bloomberg Radio. So, Joe, the president, once again, another press conference coming out, though specifically this one focusing on COVID and more vaccines coming.
Yeah, it was interesting. We were really curious to see if he might dip into the situation in Afghanistan a little bit.
No questions there.
Not at all. This is, it's a method. It's a way for a president, and we've seen this movie before, to try to get around what everybody's talking about by doing something and appearing presidential and dealing with a matter that he or she can actually control. And in this case, it's the booster shot. Hopefully this will be actually good news to some people who have been looking for guidance on it. But of course, we all know that if you got the J&J vax, and there are a number of people, we all know, have friends, family who we talk to about this, they're going to have to wait. They are not in this pool.
Yeah, and it's interesting. And help me out here, Joe. In terms of clarification, because this is one of the questions that I know that has been going around the newsroom and just even with colleagues, friends, family. Mm-hmm. I'm assuming you've got the Pfizer vaccine. If you've got those 2 shots already, that's the booster shot you get. If you had Moderna, that's the booster shot you get, correct?
That's how we understand it, yes. Although there's been quite a bit of talk recently about crossing, mixing vaccines. I'm not sure I am capable of understanding this, but we also may find with the data that comes out in the next couple of weeks, Carol, and they told us it will likely be weeks, not months, that people who had the J&J shot may be directed to get an mRNA shot, whether it's Pfizer or Moderna, as opposed to getting another J&J shot. That's going to be a game changer for thousands of people if that's the case.
Right. And the president did also say that he thought that they are seeing some numbers maybe come down in terms of cases. Mm-hmm. And perhaps that's because more people are getting the vaccine. Maybe it's because of the raised awareness. We're wearing masks again. We're wearing it here. I'm assuming you're wearing it there in our D.C. bureau. So we are quickly seeing, when he talks about the private sector, the president saying, pleased to see the private sector stepping up as well. Joe, safe to say we've seen this very quickly where companies have said, okay, we're going to slow down bringing you back to the office. Or if you're in the office, even if you had the vaccine, you're wearing the mask.
And that's right. And that is our reality. That's the case for certainly all the indoor environments now in the District of Columbia, because we are at an elevated level of risk here. But yes, if you want to talk about some silver linings here, the recent warnings and the upticks in cases we've seen have driven people to have the vaccination rate is the highest it's been since May. And that is progress, certainly in the corners of the country where we're seeing hospitals fill up.
You know, it's interesting. You certainly are watching this with, the Washington, D.C. and the government lens on. We've been watching it, too, in terms of the market impact. And I was thinking about some of the guests that we've had on Bloomberg Radio, Bloomberg TV. One earlier, reminding us that if you go back a few weeks, go back a month, the Delta variant, we were watching it, but we weren't so worried. It wasn't maybe on our risk list, but we've seen that certainly pick up over the last couple of weeks. And the question is there a way out of this, meaning the Delta variant? And there is a way out. It's getting booster shots. It's putting masks on. Right. It's maybe slowing down the reopening. Which sounds ridiculous, apparently, to some Americans, but you are speaking truth right now. And the worry is, as you talk about markets, and we turn away from politics for a second, what if the workforce does not come back in September? What is that going to mean for the economic recovery? And I'm not sure anyone right now has the answer to that. We're going to figure this all out in real time in a couple of weeks. Well, and I think what's interesting too, Joe, especially ahead of the Jackson Hole meeting of Fed officials, Jay Powell next week, we're focusing on that to see if we get any more clues, in terms of changing Fed policy, maybe easing off on the easy monetary policy or the purchases, the asset purchases. What's interesting, we got the Fed minutes from that late July meeting. We got that at 2 p.m. Wall Street time, showed, most Fed officials talking about changing or, in favor of maybe tapering by the end of the year. But again, or seeing tapering. But again, we know it's going to be dependent on the data points that we get. It's going to be dependent on whether or not we do continue to see the economy reopening, or do we see a rollback? We're already seeing that in some of the TSA numbers, right, when it comes to traveling. Yes, that's correct. And this is the part that hurts, because we thought we were beyond that level of uncertainty, that we were on the trajectory to something normal. People are scheduling vacations. Well, now, in many cases, they're canceling them, Carol. Well, and what's interesting, too, and I don't know if you found this interesting from the president, Joe, is President Biden saying the threat of the Delta remains real. We've got that. But the U.S. is prepared. And this is something I know I've talked about with you. I know I've talked about it with my guests here on Bloomberg Radio, is that we do have ways to deal with it now. We understand what we need to do to maybe slow the rise in cases, and that means putting on masks, maybe slowing down, bringing people back to offices. We've got a vaccine, and we know it works. So Cynthia Coons had a great story on the Bloomberg in the last week or so that, hey, folks, the vaccine works. And if you do get COVID, the likelihood of you being hospitalized, the likelihood of you dying is less likely because of that vaccine. It's far less. And now we even know how long these vaccines are effective for. We just learned something new today. 8 months after your second shot. We didn't know that necessarily before. Right. When we figure out the J&J aspect of this, we're going to just be a lot smarter about it than we were even a couple of weeks ago. Well, and the thing is, this is something we've talked about. All of this in terms of drug development, in terms of putting those vaccines out there, in terms of testing them, this is all happening in real time in front of all of us, right? Typically, a drug comes out, a new vaccine, there are test groups, right? And we don't hear about it because we don't hear about it until the drug is fully approved. We had to do emergency use authorization. And so as the testing goes on, when we find the efficacy rate starting to wane, or the effectiveness of the vaccine starting to wear off, right? It's happening to us, and we're finding out about it in real time. And this is something different. And as you said, it's actually, though, really important for us to know. And then we know when we do have to get a booster. Absolutely. And to think that we're still learning about this is amazing. And to your point, full approval, you like to think, will in itself increase vaccination rates. And I'm sure, I could ask you that same question. You're talking to a lot of smart people about this every day. There is a belief that when people see it's not just emergency use, they might be more willing to trust it. Yeah, exactly. Well, having said this, it's been a crazy couple of days and crazy week when it comes to Washington. When you look at the president, and he's been out there in front of the American public, and certainly in his conferences that he's been holding, I don't know. How do you sum it up, Joe?
Well, I'll tell you what, it's become, it's just a pile-on. You know, we started this whole thing with infrastructure, and that was like wall-to-wall coverage.
Feels like
now we have a
years
crisis
ago.
in Afghanistan. Right. Do we even remember that? Now you add the COVID situation and looking at these rates, now adding new information about a booster shot. It's just drinking from a fire hose down here. And the killer is, this is the middle of August, supposed to be the quiet time in Washington. But there's a reason why the House is coming back early. That'll be on Monday.
Right.
And there's a reason why the president is not at Camp David right now. It's because of all of the stuff that we're talking about. I was at the White House for a few hours yesterday. There's a real sense of urgency there. That briefing room is packed when anybody wants to speak because we all have so many questions.
Funny, just a couple of weeks ago, or just in the last couple of weeks, we've talked about how it got quiet on Wall Street, but it definitely, I know it doesn't feel that way. Looking forward to Sound On. Joe Matthew, thank you so much. Really appreciate your insight. And folks, that's going to do it for the Wednesday edition of Bloomberg Business Week. We'll be tracking Robinhood and, of course, Costco earnings into the Thursday trade. We've seen those stocks definitely moving in the after hours. In fact, Robinhood now down about 5.5%. For the whole Bloomberg Business Week team, I'm Carol Masser, and this is Bloomberg Radio.